Good morning, and thank you for joining the good, the bad, and the surprisingly okay amid economic headwinds with Ethan Chernovsky, VP of Marketing at Placer AI. As a reminder, if you have any questions during the conversation, to please use the Q&A function at the bottom of your screen. Now, here's your host, Deborah Weinswig, CEO and founder of Coresight Research.
Good morning, good afternoon, good evening, everyone. Very excited to have you here today to chat with Ethan from Placer on kind of what's happening right now, right? Where are we? Where do we think we're going? And if we kind of look out into the future, what is his crystal ball telling him at this point? And so a few of the topics we want to make sure that we hit on today, and of course we'll extend that to a bit more. But number one, which retailers and segments are most likely to thrive in back to school in the face of inflation and high gas prices? Number two, which retailers and really retail segments are best positioned for the back half of the year? And then as we look into 23, which I can't believe we're already talking about that, and beyond. And then as we think about, who might struggle and which sectors, we've had a lot of conversations, Ethan, around the digitally native brands, where are they? Where are they going? We've got, a lot of folks who are basically building their shopping list, right? As that sector, potentially weakens. And then, as we start to think about dining, right, whether it's fast casual or, QSR or whatnot, kind of what's really happening to that segment and, kind of innovation and what do things look like. And so, Ethan, I know we have a lot to talk about in a very short period of time, so I'll hand things over to you.
Thank you so much, Deborah. This is always kind of my favorite way to love having these conversations. And just, I guess, the really quick introduction for those of you who are not familiar with Placer. We are a location data company. What that means in the simplest form is, people vote with their feet. We're showing you how they vote across the United States every single day to retail locations. We do that by observing a panel of over 30 million devices throughout the country. Very critically, this is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then analyze that data with machine learning and AI algorithms to make estimations and present that in a wealth of different reports within our platform on everything from the customer journey, to trade areas, visit counts, and a whole lot more. And I think that is kind of a good segue for us to get into the big questions that we wanted to talk about.
Well, there certainly are kind of a lot of them. As we think about back to school, and I think that, it'll be a very interesting year amidst the inflation and, just kind of some of the trends that we're seeing. As historically, the kind of old adage was, right, 10% increase in gas prices, there's a 100 basis point, kind of clip to sales. We really haven't seen that, and especially when you think about how much gas prices are up. But what we have seen historically is that those retailers that were closer to the consumer definitely gain more mind share, market share. What do you think we're seeing right now, Ethan? And what are your predictions?
So I think there's a couple of things that are all happening together. So there's this wider orientation to value, which is going to continue. And I think value can mean very different things in different market segments. So, what's value for that kind of upper end audience is very different than what's value if you're kind of living paycheck to paycheck. But I do think we're going to see that continue to play a really significant role across these kind of markets. One element of that is going to be this trade down phenomenon. So I think elements like discount and dollar stores, off-price retail are going to continue to be really strong because they can enable someone to maximize their spend in a more significant manner. And that's really oriented towards the combination of inflation and gas prices. The second element is really focused on what do increased gas prices mean to the visit itself. And I think it fundamentally changes the calculus of when you leave the house and what you're willing to do. So we saw this in the pandemic, this shift to mission-driven shopping, where it was, how do I accomplish as much in a single space because I don't want to get COVID or I don't want to be overly exposed. Here we're seeing something similar, but it's not because of COVID anymore. It's because of I don't want to overspend on the trip itself. So I think we have this really interesting shift that's going to take place where we're going to see that one-stop shop be really significant and that mission-driven shopping and that trading down orientation to value. And that's both in things like that are obvious. So QSR instead of full service, discount and dollar instead of something slightly more expensive. Grocery, though, instead of restaurants. So some of these kind of patterns that we orient with that value shift, I think are going to be really strong in the next couple of months.
And as a result of that, and we see this change to kind of near shopping, if we want to call it that. How do you think retailers can best position themselves?
So I think one, the emphasis on value, the emphasis on proximity and local is really important. I think that there's, we're going to talk about them later, but just the communication of, a year ago, cost cutting was not as significant a feature as it had been in the past. I think it's going to be more significant again. And therefore, how do you make sure your customers know that you can satisfy these needs that they have in this period that's really difficult for a lot of people? And I think just emphasizing those assets that you bring to the table as a retailer is really important.
It's really interesting because I think that if we kind of dig back into our bag of tricks from the past, and we look at kind of who wins in the near term, the medium term, and the long term, I think that in some ways those are definitely different. Yeah. And that is, and also too, I think, right, the population, I mean, one of the other things, Ethan, I think you guys have great data on this, right? The population has also, we've had some shifts, and that I think is also driving, some of the results that we're seeing here.
Oh, I think you're absolutely right. And the interesting thing is, we just launched a new functionality that we call targeted search, which basically allows you to filter stores within a chain or within a category by demographic factors and a whole range of other elements. And what's really fascinating is not just that people moved, but which people moved. Because if I'm, an organic food lover, or I am, very oriented towards kind of a vegan lifestyle, there are certain products, and that audience moved from place A to place B. It's not just the fact that, there's movement. It's who is moving and which products now were doing really well in a specific Kroger and are not going to do less well today. And I think that level of understanding of how these audiences are shifting and what those shifts in preference mean on a location by location basis can offer tremendous upside to some retailers who are really ahead of it, but can also turn things on their head for retailers that are getting these unexpected shifts where a store was doing really well for a specific product line and it's not anymore.
Actually, it's an interesting point as well. And I think that what matters to consumers, I think, continues to evolve. And I think just the numbers as we see them here from Tractor are fascinating, because as you think about, well, actually, I'd love to hear your opinion, and then I'll share mine.
So, I mean, I think what's interesting is when we think slightly longer term. So I think when we were thinking about that immediate short term, we're like, all right, what's really impacting consumer behavior right now? When we think a little bit longer in, you're looking at the brands that I think have shown a real capability to almost be circumstance, to succeed regardless of what the wider context is, or to be. And when you think about the Targets of the world and the Walmarts who are able to combat so many of these challenges just because they have this wide breadth of products on offer, because they're able to keep costs down for customers in times when it's more difficult, and then shift that a little bit when things are a little bit better. But you think about some of the brands that have managed to take advantage of short-term opportunities and turn them into longer-term value. And I think Tractor Supply is one of those brands that really stands out. Of things worked in their favor in this really short-term period, but they made the decisions necessary to turn that into something very long-term. And now you have this rapid expansion of stores. You have other kind of product lines being brought into it. You think of like Lowe's and the creativity they're doing by bringing like pet stores within their locations. I think that's where the real magic happens. It's not the retailers that succeed because there is a short-term alignment behind them. It's wonderful, it's great, it's amazing, but it's short-term. The retailers that find that wave, but then make strategic decisions to turn it into something that lasts much longer, I mean, that's where the really interesting thing is.
No, I couldn't agree with you more. I mean, I also think that, as we're seeing food inflation, not showing any signs of necessarily abating in a significant way, consumers are thinking about how to mitigate that. And so whether it's, kind of growing their own chickens for eggs, or, kind of, starting to do more gardening and canning and whatnot. I mean, I think that if you think about at least let's call it the 22 trends, tractor will definitely, kind of be one of the bigger beneficiaries there. And it's interesting. I dragged out some of my kind of work from when I was a sell side analyst, and going back to like the GFC, right, the last time we had let's say a unexpected kind of impact to the consumer, that the clubs did really well, which was somewhat counterintuitive, right? Because you have to kind of pay to shop. But because, as everyone did the math and they looked at like per unit and whatnot, it was actually, and so, you'd see people on the parking lot, right, like kind of dividing up and whatnot. And so I think that as we are, continuing to move through a very high, a very inflationary environment as it relates to consumables, that, a tractor, a Costco doing well does make sense. And as they are also able to kind of bring new customers into their, awareness, really, I do think there's also an opportunity in terms of loyalty and community, how they kind of embrace that, the impact longer term for them as well.
I think you're dead on. I also feel like there's something that, when you think of a Costco, a BJ's, a Sam's Club, I always orient myself towards Costco because the incredible thing is you have this very small kind of obstacle in that you have to pay the fee to get involved. But once you do that, it creates this fundamental stickiness of like, if the experience is good and I've already paid for it, I'm going to keep on coming back. And so if they can get you over the hump, and then they are able to do what they do so well, which is, again, you walk into a Costco, you feel like you're getting a lot of products and you're getting a lot of value, you're going to keep on coming back. And the amazing thing about Costco is we saw this at the height of the pandemic, their visits were down less than their visits per visitor. So what that meant was people were still coming, but they were coming less frequently. And the amazing thing about a Costco is you can go, all right, if you're going once a month and you shift to once every 2 months, that's not necessarily a bad thing for Costco because there is that I can buy for a longer period of time. I think the one that's really the surprise, really interesting one is movie theaters. I think there is this one, we know that when times are tougher and people need to have that kind of, all right, I need to get out of the house, I need to do something with the family, movie theaters tend to do pretty well because they are a cheaper option. But now you also have this element of, we haven't really been going to movie theaters. There's this backlog of big blockbuster movies that are coming out in a row. And it just feels like this is a segment that had been so down and so, by the way, some of it self-inflicted. It's not just the environment, but that there is this, apropos what we were just discussing, there is this unique opportunity where things could turn around. And if they're being strategic and thinking about how do we shift the space for the longer term, there's a real potential for this to be a moment in time that drives a fundamental recovery.
Yeah, I mean, I also think there's something we said, we want to move to the next slide, is that, in some cases, right, consumer behavior can be a bit stickier. And, as we've all changed how we entertain ourselves, where we spend our time and our money, I do think some of that is just going to take longer to recover too. So speaking of recovery, and, and I think that, it is quite interesting when you think about, the different sectors here. I don't think you could have kind of put it in a different way. And one thing actually I think is interesting in home is, right, we're continuing to see, right, the value sector on the furniture side is still actually outperforming. I think when it comes to more decorative and, kind of softer home, that, that's kind of the juxtaposition. But I do feel that is quite interesting. I don't know if you want to kind of jump in on home goods in a little bit more detail.
Yeah, I think it's the question we're always asking when something is down is it down because there's a fundamental issue, or is it down because of circumstances? And so you think of outlet malls and, they're generally further out. This is a period where we should be oriented towards value, and these outlet malls really service that. But because of gas prices and their relative distance from their audience, that's something that for the short term could take a hit. So you don't really feel so down in terms of the long-term prospects. When you look at home furnishings, it's interesting because we definitely, from the peaks that they were hitting a year ago, 2 years ago, to see year-over-year declines in visits, and certainly year-over-2-year declines, there is this, did we see the end of that wave? And I think the answer is no. So I think when you look at like a home goods, as much as the numbers are not what they were a year ago or 2 years ago, I think that is very circumstance-based. And when you think still how much movement there was, how many shifts and people there were, by the way, not from a net perspective, not huge, but in terms of people leaving areas and coming new to areas, that's a big change. And those people need furniture. And in a period where they can get that furniture at value, that puts a brand like Home Goods on a pedestal. And so while I think things might not look as rosy right now as they may have in the past few years, when you think 6 months, a year down the road, you're expecting Home Goods to be back at the top of that mountain.
Yeah, it'll be interesting to see, as I think that, there has certainly been, a focus by the consumer on, I think this destination shopping as well, right? Where, I think in a higher gas price environment, if you are, let's say, redoing a room, whatnot, not having to go, right? You want to go to kind of one-stop shop. And with Home Goods, right, the great thing is you never know what you're going to get. At the same time, you never know what you're going to get. And so this idea that there is, right, a consistent offering, I just think it's so much of this is, it is inflationary, kind of recession-like behavior. And I have to say, I've actually been shocked at the strength in outlet malls considering gas prices. That to me was like, much, much better than I would have expected. And, certainly back to school is always a strong time for them, but I thought the numbers were quite good.
I mean, I think relatively, I think you're 100% right. And I think it's such an important perspective. And, we talk about this quite a bit of, there is this tendency to see things down and to kind of lose your mind and be like, oh, everything's terrible, visits are down. But when you think contextually, visits are down, but they're only down a little bit, when in theory, this is the almost like the worst case scenario for a sector. If you were saying what's not good for outlet malls, it would be it's an extended period where it's pouring rain and gas prices are really high. So you at least have one of the two, so the relative strength I think is really important, and it shows that what you are seeing in terms of weaknesses are probably very short term and will bounce back as some of these elements recover.
And with that thought, and this idea around kind of like bounce back and holiday, and as we're seeing, what we're hearing, right, as it relates to mall traffic and whatnot, right, the kind of top malls in each market are continuing to see outsized strength and growth.
Yeah,
and I think that will personally continue into the holiday season, right? It's a very inexpensive form of entertainment, right? It is amazing, right? The holidays do happen every year. And, I do think that we will see, kind of this idea around, malls as entertainment, as, kind of places to grab a bite to eat. And then also this idea that you can get, going back to this idea of shopping, kind of a more traditional, furniture location, kind of tete-a-tete, Home Goods. I think the mall is the same way, right? That I can get a lot done in one location. And so I'm not driving all over, right, kind of town trying to do my holiday shopping. So I think there's something to be said about that. And as these malls also focus on loyalty and kind of some of their other initiatives as we look into the back half of the year, as it relates to the department stores, I mean, they have had challenges. There are some other formats, I think, that have overbought, that are, we're seeing greater discounts. And so I just feel like there's, former department stores, right? There's always like so much that's happening, and it's always a bit of a, kind of a distress. And I feel like they're always kind of a little bit behind the eight ball. Although when you think of the format and what they offer and whatnot, they really shouldn't be. And, I think one area that they're really focusing on is, right, returns continue to be an outsized problem, right? As we're seeing more kind of e-commerce sales and just, kind of, consumers trying different brands, which is great, but that if we can continue to see this movement towards returns in a physical box, Ethan, right, you have what the data shows, right, not only do you replace that sale, but then the consumer actually spends on average 40% more. And if they're returning to a physical store, you're typically getting that product back sooner and in saleable condition. So I do feel like this sector specifically, there's a lot that's changing. And then as it relates to the malls and going into holiday, I do feel that there could be, we could be pleasantly kind of surprised on the upside. At the same time, we're expecting the current environment to, more or less hold.
Yeah, I think, first of all, I agree with so much of what you're saying. I think back to school is going to be a really tough period when you look at visits. So when you're looking at foot traffic in brick and mortar and you're comparing it year over year, it's going to be hard because especially July and early August last year were really strong. The end of August is where we started seeing things tail off as the Delta variant rose. And so I think it's going to be a tough comp for a lot of retailers in the next month and a half. That said, I think the flip side is true for the holiday season. So we were already seeing the impact of Omicron by early November in the holiday season last year, which means the year-over-year impact for brick and mortar is going to be really significant. And I think the people that benefits are those where the players that benefits are those that are very oriented towards the full experience. So the indoor malls, like you said, there is an experience that comes with it, and it wasn't fulfilled last year, even if we got products and we were buying, the purchasing power was there and the purchases were there. The other element of that is the full day out experience that the mall can provide. So it's not just, is it a place where I can get shopping done? It's a place where I can get shopping done, I can get a bite to eat, I can go see a movie, I can pick up one or two more things and have this experience that is going to both, again, gas prices, it's one stop, it's only one place to park and go back from, and it's all housed in one place. And there are all these other side elements that make the full day out so much more exciting. And I agree with you on the department store side too. I think this idea of returns within the store is something that it is a golden opportunity to get people to come back, not just in those, also even the days after the holiday season. So that post-Christmas period, come into the store, return it. We're going to make it free to return. We're going to give you some sort of upside because we know that when people return it, they do spend the money again in store. And if I'm a mall that has a department store within it, I'm trying to figure out ways to incentivize that, to make this post-Christmas holiday of coming into the mall to like return the goods, to maybe do some other shopping. I think it is such a golden opportunity, and a lot of the brands we speak to are keenly aware of it. They haven't yet figured out how to incentivize that trip back, but that's where there is so much room for creativity. And how do we take this challenge of, returns, which is such a limiting factor in the e-commerce environment, and leverage brick and mortar as a place to turn that into a fundamental opportunity?
You said something really interesting, which is, kind of how the mall is thinking about, right, the department store as opposed to the department store just being kind of on their own. Are you seeing changes there in terms of how kind of, I know there's this idea of malls as platforms, malls as marketplaces, how they are supporting their tenants in a different way?
Yeah, I think and I don't think this is a pandemic thing. I think this was already happening 5-6 years ago. By the time we were getting into this space, we launched our product in 2018. The mall groups that we work with were already talking about, we need a much more experiential experience, right? It's less about apparel. It's more about the things you're going to do. It's more about the things you're going to do midweek, not just on the weekend. And I think you're seeing the benefits of that for those top tier malls. But what's really interesting here, and this is when we look 2023, 24 beyond, is if top tier malls start to be less focused on apparel, and they start to be more focused on experience, and we see the rise of digitally native brands, and we see retailers that are looking to right-size their fleets, what we end up with is more diversity within the mall landscape and less kind of copy and paste within the mall space. And the really interesting thing there is, if that happens, all of a sudden there's room for these B-class malls to find an identity and to have a real gap to fill within the market, because you can't all be fulfilled at that top tier mall because they're less oriented towards apparel than they were in the past. So I think there's this really interesting potential waterfall effect that we're tracking really closely that has got us really excited about the potential for some other types of assets.
Well, I have to say, one of the, I think, newest entrants to many malls is pickleball. Going back to your kind of conversation around, right, experiences, because I look at it, right, you have experiences, right, like a pickleball, you have entertainment through theaters and whatnot, you have, the opportunity to grab a bite to eat or, something to drink. And then this idea that you have kind of, the backdrop, the foundation, right, is this opportunity to, discover new brands, kind of meet up with the brands you like an old friend that you like know and love. And so it seems to me that there's also, kind of in some cases, the opportunity to remind consumers, the needs that the mall fills. I feel like it goes back to this idea around like malls as platforms or marketplaces, right? Like just doing more, as one, right? As opposed to kind of the mall REIT as a whole, right? Your individual local mall, right? Kind of doing more outreach. I feel like they're like no other time. There's an opportunity and just this, engagement and community. It just seems like, we're ripe for that.
I agree. There is one interesting element though, and it's a mindset shift for the mall owner. The mall owners, so many that we speak to when we have this conversation, they say that the mall is the stores that are within the mall, or the kind of those, tenants that are within the mall. And it's true. There's no question, if you don't have good tenants, it's going to be rough. But the mall is a brand also. And I think that this idea of the mall as a platform is a really amazing expression of that idea that, I grew up in New Jersey. The Short Hills Mall means something. If a new retailer opens in the Short Hills Mall, I have a certain assumption about that retailer. It gets a certain status by being in the mall, even though the mall also benefits from having that retailer. And I think that the balance that mall owners are going to have to find as the mall becomes a platform is going to be really fascinating, in that it forces them to really embrace what is your brand as a mall itself.
I couldn't agree with you more. I mean, I also think that there's a tremendous opportunity where, okay, so Ethan, you don't live in New Jersey anymore, but you have these really fond memories of Short Hills. And right, if all of that inventory, if some of that experience, even on the food side, could be available to you in, the geography you're in now, that to me, right, it can bring up a lot of the nostalgia. I mean, and I think many of us feel the same way, or you went on vacation and you went to this great mall and you had this great experience. And in some ways, right, if you now can shop that mall that, virtually, or even with, going back to even with like a assisted sale, right? Like one-on-one. I feel like there's so much more. I mean, this is why I've been, kind of very constructive on the sector. I think there's so much more. I do think a lot of it is going to be kind of, prop tech driven. Mm-hmm. And, and I'm comfortable with kind of where the industry is. I do think there's an opportunity for, to kind of see it propelled much farther into the future, but a lot of it will be tech. And a lot of it is kind of, what Placer's doing, just like helping all of the, helping everyone better understand kind of where the trends are, where we are today and where we're going, and like, what is it going to take to get there? And so I do think,
this is such an important point. And I apologize. I know we have to get to this topic, but it's one of the things that like we hear a lot about, and I love, is this growing comfortability with change within the mall. So, hey, should we have a space that's just for pop-ups? Should we have a space that we're only expecting these leases to last a couple of years, not 10 like we would have in the past? Like, you brought up the nostalgia point. I know this is silly, but TCBY was our frozen yogurt place of choice where I grew up.
I haven't heard that in a long time.
Right.
Yeah,
I mean, neither had I. And we were traveling with my kids somewhere else, and we saw it there, and it was this like, oh my gosh moment for me and my wife. We dragged the kids in. And can you bring back these concepts? You're right, you don't want forever, you don't know, but there is this nostalgia element, this excitement. And if you have spaces that are dedicated towards short-term excitement driving, there's room to do a lot of things that you wouldn't have done in the past.
I kind of like that. No, there's that whole kind of idea. And I think, right, also too, and, the demographics, if you look at kind of how, let's call it later alphas, earlier Gen Zs, right? There is this real interest and demand to go to the mall, which I think is great right? Because they then bring their parents and you get the whole kind of knock on positive effect. And so I do feel like we're in a bit of a, kind of renaissance. I think if gas prices weren't where they are, we would certainly be in a stronger position. But I do feel that like the fundamentals are much stronger than I've seen them in many years. So as we think about luxury, which I think is the hottest question these days, because we've seen such growth, not only in terms of locations, but also just in terms of sales. We've had challenges around, kind of scarcity of product. We're starting to look at, right, consumers are talking about how, buying these products, I mean, it's like buying a stock or a bond, right? There's like a value and that it appreciates. And so I have been, in a lot of these conversations around luxury, once again, things I would not have predicted, the consumer looking at, kind of luxury products as investments, I think is just absolutely fascinating. And so, as we start to see, maybe some softness in traffic, how do you feel that looks for the back half?
So I started off less excited about what luxury's long-term was about 4 or 5 months ago. And there was a handful of people, you included, that kind of pushed back and shifted my opinion, forced me to rethink about it. And there's elements like what you said. A product's cost is different if it's an investment versus if it's a purchase that you're expecting to just kind of end up in the back of a closet one day. So if I spend $1,000 on something, I feel confident I'm going to resell for even a fraction of the cost, let alone more. It's not a $1,000 purchase anymore. You know what I mean? It could be a $300 upside if I sell it for more. I think that is a huge element. I do think there is going to be a degree of softness because things are not as good than for kind of certain audiences than they were 6 months ago. And it doesn't mean a massive, the sky is falling scenario, but it could mean minor shifts. So if I was much more freely willing to buy, a luxury item, and now I'm going to do a little bit less, I think that makes sense to me. I also think that this sector is tricky to understand because if you looked, at a lot of players in May of 21 or April of 21, they were doing really well, even though visits weren't doing amazing. And it was because there was a much more efficient visitor. So the person was coming with intent to buy. They weren't coming to just walk around. And so there is this weird question of, are the visit declines that we're seeing, do they look more like May of 21, or do they look more like a visit decline that we had seen in the past? So that is a question that I don't have an answer for yet. My suspicion is that even though there are declines, the sector is still in a much better position than it was just a few years ago.
So it's an interesting, I think you've now kind of extended the luxury consumer as well. 100%. And that I think is also a very interesting kind of thought around, who the consumer is and just how much broader the product appeals. Mm-hmm. And why I think that, and in the short term, right, everyone's kind of maybe feeling a bit of a pinch, but longer term, yes, I agree with you. I think there's a lot of staying power. Oh my goodness, this is definitely a challenging topic. So like I said in the opening remarks, right, we've started to see companies, those with a physical footprint, building their kind of shopping list as this like DNVB, digitally native brands. This bubble starts to burst. And, as we look at, kind of, I think we're still very early. Valuations have not come down yet. So I think the thought process is this is more of a kind of first half of 23. But I don't think that, I think there is less appetite to fund companies that are not making money now and don't necessarily have a path in the future. And so I have felt the weariness of that. And, I think hence the title and the kind of, if you will, the comment at the bottom, because I think that, their ability to raise more capital in this environment, they can do it in a down round, but I just think it's more challenging than ever. I don't know where your thoughts are.
So I think coming from the technology space that's seeing large scale layoffs, hiring freezes, huge challenges because of this issue of money was really cheap. Now it's not so cheap anymore. And so the fundamental calculus is changing. I think it goes back to there are companies across any space that were fundamentally irresponsible. Like the valuations were crazy. They made no sense. And some of those companies are going to disappear. When we think of overall, whether it's technology, and I say this specifically coming from that space, or digitally native brands, I don't think much is changing. I think we're seeing a correction from some of the madness that we'd seen in the last year or two. I also think this space is struggling from the scale of the narrative. So it was, oh my God, these are the greatest things ever. Goodbye, every older brand that's ever existed. To now, they have no chance. And I think both of those things are crazy. And that when, it was, there was a NFL quarterback, one of the best players in the NFL, who said their team started off 0-2, and in his big press conference, he said, RELAX, relax. It's going to be fine. And I do feel that a lot here. These brands do something really special. One, they come from the technology background, which means they got caught up in some of this cycle of the overvaluations and some of the issues that come from that. But they also still have all the benefits. So they think differently about stores. They think about stores from a customer acquisition perspective. They think about stores from a distribution perspective. They think differently. And as a result, I think they're going to figure out how to maximize stores in a different way. It also takes time to learn how to develop these skills, to deal with certain challenges. Some of the best retailers in the world have struggled in the last 2 years. So let alone ones that are newer into the mix. Overall, do I think this space is unbelievable? Am I less excited about this space than I was 6 months ago or a year ago or 2 years ago? No. Do I think that the narratives have been unbelievably polarized and shifting? Absolutely, but it doesn't change my bullishness of what they're going to mean to the space, the scale of this entry into the market, what it's going to look like. I do think one thing that we will see is the direct to consumer element will be there, but you're going to see more people think about, all right, how do I sell through a partner? What is my wholesale strategy? How do I sell through a department store? Whether that be a Neighborhood Goods or a Macy's. I think we're going to see that a better balance identified there.
I don't often disagree with you, but I'm going to take the other side. So I think that in a cookie apocalypse kind of world, it's much more difficult for them to gain eyeballs, traffic, consumers. And so, right, their CAC is going up significantly. If they move into physical, right? I mean, that's like, it's so funny because I think that everyone had thought, oh, physical stores are so easy. I mean, they're incredibly hard, right? You have to think about POS, merchandising, right? Kind of what, how do you think about your size run in the store and customer service and engaged associates and all that? I mean, I just think that physical retail is so much more difficult than anyone ever gives it credit for. And I think that on like the DNVB side, and it's not every single one, but I do feel that there's often this, kind of like, oh, it's so easy, we'll just pop into a physical store. I do think, like you said, they'll need, either being acquired or, if you see these kind of, virtual pop-ups, although, right, the top malls, right, they're at like 99.9% occupancy. So that goes back to where I would normally say, okay, maybe, one of the malls kind of has a section for like these DNVBs and they like rotate them through, right? They've done that. I just don't think they have the space to do that right now.
It's a really interesting challenge. I think it goes to, companies like Leap that have these models of, hey, we're going to help you figure out your first 5 to 6 stores. This is hard. Like, we're going to help guide you through that process. I think it really makes you excited about models like that. I think you're going to see that come out, think like we saw with, WeWork and then, 16 other versions of that. I think you'll see more models that try to take advantage of that challenge. But I think it's going to be, I agree with you that the difficulty was underestimated.
No, exactly. All right. I think we're in our home stretch, if you will. We have a few questions, so I'll kind of look through those and see which ones you maybe have not already answered. I think that, one of the key questions here, it's a lot around kind of, expectations for back half, expectations for 2023. I do think that, maybe the question from Michael that we didn't necessarily kind of address in our, kind of conversation was just around, if inflation kind of stays at this level, let's, call it high singles, low doubles, what is the longer term impact, and what's your advice for retail?
I think we're going to see, there's certain areas that we feel a little bit more confident in what we're going to see. And there's other areas where I don't have that same level of confidence to kind of project. But I think take a space like grocery. I think grocery is going to be one, you're going to see the continued growing strength for things like Aldi and Lidl and, grocery outlet. I think grocery is going to continue to be strong. I think there's big question marks though, when you look at these spaces of, again, like what we're seeing with Albertsons and their media network, what we're seeing with Kroger and Ghost Kitchens. That's the type of innovation that you want brands to be showing in a period where they're doing really well. Like this is when you should be testing out these concepts. So that's a space where you see strength and you expect the strength to continue. There's other areas where it's really difficult, at least for me, to make that kind of estimation of how long these things are going to last, even in something like dollar stores. I mean, I'd love to hear your take of who you feel really confident, the take you feel very confident in.
I mean, I've always, I think the value space has really been somewhat transformed. And I think that in an environment like this one, you'll have new customers shop with you who haven't before. And, when they see not only the strength of your own brands, but also, kind of private label, how they're displayed, how easy it is to shop, right? Kind of I do feel like there's an opportunity in this environment to gain new customers. And it was funny. I was with the, kind of leadership team at Five Below. And I was like, if I remember from the last, kind of downturn, you guys are like counter-cyclical. They're like, absolutely, right? Because you can go in and treat yourself for $5, right? And that whole idea, right, that I can have like a treat, I don't feel guilty about it, right? That's the other very, I think, important side of it. And so that keeps you coming back. And they do have, right, they have the kind of like treat yourself, but they also have kind of, I'd say, especially back to school or holiday, whatever it might be. And they're very seasonal, but also with kind of that staples component. And I feel like that whole sector has not necessarily gotten, and once again, they're not very sophisticated when it comes to e-commerce and whatnot. But I think in this environment, what it is that they stand for, I think is more important, right? Which is taking care of the customer and offering, kind of the lowest price possible, because that's what the consumer needs right now. And if they can, offer great customer service and, kind of great product, I do think there's an opportunity for them to gain brands. And, we'll see that not only in, right, like some of the off price, we'll see that, we talked about kind of the value furniture segment, looking at kind of, food and consumables with some of the brands you mentioned. And then also I think the dollars. And I just think it's a segment that, is often kind of underfollowed, if you will, from like a Wall Street perspective, not as well understood, and it's because it's not sexy, right? Like, let's be honest. And so I think that, but to me, right, that's the whole like diamond in the rough, because I actually think that you have tremendous merchants. I mean, and these guys have all been opening stores, right? Yeah. Lots of them. And so I do feel like there is like this like muscle memory that they have. And, and hey, who knows? I love your kind of thread around, kind of partnering with some of these DNVBs, right? Like, who knows where that might go? And right, you've got space and you've got opportunity. And, I think that there's, there's a lot that's going to unfold this holiday season. And I think we'll definitely see, and I think a new retail, because if you think about it, right, and you talked about media, right? You've got 3 new things you can sell: retail media, monetization and, NFTs, right? So you've got 3 new products that really a year ago we weren't seeing. And then you've got, right, these 3 new ways to sell it. So whether it's, kind of through the metaverse, quick commerce, or live streaming. But when you think about the opportunity with all that just for retail, I mean, I think that's why both you and I are so bullish on the sector.
Yeah, it's an exciting time. I think it's when you look at the innovations that are taking place, and I think you realize that, there's a lot of new stuff. It takes time to figure out what's going to work. It's usually not the first run where the genius idea that explodes comes. And so the more of these balls that get rolling, the more likely you're going to see some of these really exciting elements moving forward.
I couldn't agree with you more. I know we have lots of questions, and I think we covered most of them in our comments. Feel free to reach out to Ethan or myself to address anything that wasn't answered. But Ethan, always a kind of whirlwind whistle stop tour with you. I think that the data is great, the insights, and really, I think giving people kind of not only just looking for the rest of this year, but a path ahead. So thanks as always for joining us, and looking forward to seeing you again soon.
Thank you so much for having me. Thanks everyone for joining.
Yeah. Thank you. Bye-bye.